Hi everyone, and welcome back to a brand new episode of Business Tips for Trading Across Borders, an initiative by the Ceylon Chamber of Commerce with facilitation from the USA Partner Activity Program. We're here to talk about an interesting topic that is on everyone's mind, through letters, AI, but we are here to talk a little more specifics about it with a duo of this technology in a trade-oriented situation as well. And in particular, we're going to talk about AI in supply chain management. And I'm privileged to have you with us today, Anam Rahman, who is the founder and CEO of Kavida, which is an emerging technology startup and company that's doing a lot of things in this area, and we'd love to get his experience here today. Anam, welcome to the show.
Thank you. I'm delighted to be here. Sri Lanka plays a very important part of our company's story over the last 2 to 3 years, and the technology that we built wouldn't have been possible without this country. So excited to share what we've learned throughout that process.
Thanks, Anam. So let's get straight into it. I think we can understand also what Kavida is through some of these questions as well. And I think one of the key things is we talk about supply chain, we talk about optimization, but how is AI really having an impact on supply chain, and how is the integration process taking place at the moment from your experience?
Yeah, so I think we should start with why there is a need to adopt AI, and then the role that AI plays in that process. So firstly, supply chain management has to change. It has to change because the way we run our supply chains was built for an old environment. For the last 20 years, globalization was marked by stability, order, things flowed from A to B relatively in a stable way. Then came a pandemic and the aftermath of that, and the entire operating environment had completely shifted. The problem was that our operating models like lean, just in time, our tools, systems and processes, they were built for that era of globalization where everything was stable. We've now entered this new era where chaos and uncertainty is the new normal. You'll often hear the acronym VUCA, volatility, uncertainty, complexity and ambiguity. But supply chain management is still stuck in the old game, and it hasn't adjusted to the new game. And how this actually plays out on a day-to-day basis, a really good example is in 2023, you can't be managing your supply chains on Excel. The world is too complicated, there's too many things going wrong. So there is a massive need to change, and AI and the integration of AI is therefore the enabler to compete more effectively in this new environment. And in terms of how the adoption or the integration has come, it really depends on what markets you're selling to. But there are some big challenges, and I would say that we're seeing a massive intake in the West, and this region has been very slow to adopt that technology. The consequence of that is going to be massive, because the pace of tech is moving so fast that those that have access to the tech will outcompete those that don't, because they have the capabilities to compete in the new environment, whereas a lot of industries, a lot of companies are still stuck with the capabilities to compete in the old environment.
Thanks so much for that, Anam. And I think the key point there is application, and that's what I want to get into in terms of course, some of the companies from sectors that you work with must be talking about optimizing inventory management. And I think you work specifically also with the apparel industry as well. Talk a little bit about how AI can really assist firms and even sectors to optimize inventory and eventually costs and be leaner in the new era.
Got it. So when we're looking at the applications of AI, there's two ways to look at it. One is you look at it from your day-to-day operations. And second thing is your big strategic decisions, of which inventory management is one of the biggest strategic decisions. So the problem that I've seen is a lot of inventory management decisions aren't data driven. They can be really based on emotions and fear. So give you an example where we've seen a lot of companies here holding millions of dollars worth of excess inventory because of the fear that the order might not arrive on time. So what's happened is, instead of accurately calculating the risk that an order might not arrive on time, they're so petrified that they order way too much. And in inventory management, inventory is a function of risk. You're always trying to balance between overstocking and the cost of that, and then understocking, and then which is the risk of stock out. So AI helps in finding that optimal balance, and then the way that it does it is by giving you and configuring the real risk of orders not arriving on time. Now, if you can get it to work for inventory management, the benefits are massive. So right now, when you're overstocking, you're paying for transportation costs, inventory holding costs, interest rate payments. But the biggest one is you've got all of this working capital that's tied up in inventory, which should be invested into the business. If you optimize your inventory through accurate risk modeling, you free up all of that working capital. So that's one of the big areas, is inventory management. Now, continuing the line of strategic decisions, two other big strategic decisions that companies should be looking at is, the biggest one in supply chain management is supplier selection, which suppliers you're going to use. And right now what we're seeing is companies are focused on the only three criteria they really have in selecting the suppliers: cost, quality, and price. In this new environment, the way we select suppliers has to be way more sophisticated. We have to incorporate a range of risk metrics, and they have to be relevant. We have to incorporate metrics that are important to our customers. So you should have over 10, 15 different metrics. You should be able to collect the data in order to configure scores for that, and then use a optimization model to tell you which one's the best. So supply selection is another big one. And supplier allocation. The way we decide which supplier gets what percentage of the allocation has to be much more sophisticated. It has to be as sophisticated as how a portfolio manager for a hedge fund manages their investment portfolio, and optimizing the trade-offs and the risk. So those are three areas when it comes to strategic decisions: is inventory with more risk-based approach, supplier selection, and supplier allocation. When we get into the day-to-day applications, the operational, this is where it gets really exciting. So firstly, AI will enable quantum leaps in productivity. McKinsey & Company did a recent report where they said $13 trillion worth of new GDP will be generated because of generative AI by 2030. Corporate profits are going to increase between 2.2 to 4.2 trillion dollars by 2030 because of the productivity increases of generative AI. So what we're going to see is headcount coming down, companies being able to run with less people, productivity increasing, or the freeing up of that labor to work on much more strategic tasks where a lot of the manual processes are completely automated, because it's never been easier to automate those tasks. And then operationally, the one that I'm most excited about is, everybody's probably had to play around with ChatGPT. That will be the default way that we interact with technology. We will speak to tech. We will type in what we want. And what's happening is, the breakthroughs in large language models are then being applied to the data that is in the software to enable that interaction. There's a whole theme about AI intimacy, which is emerging, having an intimate relationship with AI and the data that you have. That opens up a world of possibilities.
Sure. I think you also mentioned in your first answer as well some of the challenges you're seeing in more developed markets versus emerging markets like Sri Lanka. Let's talk a little bit about it in terms of some of the more specific challenges, how technologies and firms like yourself are managing those challenges, and what that is doing to the supply chain, and I think how that is now maybe in a few years' time, these markets won't be as difficult to reach compared to the developed markets, and maybe we will see a sink as well. So talk a little bit about those benefits and challenges.
So the challenges of AI adoption, this is coming from us that are selling AI into the market. I think single-handedly, the biggest challenge is the perception of risk. The perception of risk with new innovation. And we have situations where the budget holders are absolutely petrified that the innovation will go wrong, and therefore their neck is on the line, and therefore inaction is a safer decision than trying new tech. So the perception of innovation risk is a huge problem. And instead of running away from the problem and just ignoring it or not thinking about the tech, what companies should be doing is understanding the risks of innovation. And there's three big risks. Once you understand the risk, you can put in policies and processes to minimize it or hedge it. So the three big risks are initiative risk. Is this the right idea? Should we even be focusing on this? Interdependency risk. How many stakeholders are involved for this to be successful? And execution risk. Can we pull it off? So, okay, if those are your risks with this new piece of innovation, let's build some policies and some tools and a way of thinking that's going to hedge that risk. So I'll give you an example. Initiative risk. Is this the right idea? Well, one really good way that you can address that issue is you can take McKinsey's 3 horizons of growth model. And that model says about 60% of my innovation resources should be spent, 70% of my innovation resources should be spent on protecting my core. That means my core differentiators and my core operations. So things like reducing costs, reducing quality defects, being more efficient. That's where about 60 to 70% of your resources should go on. Then 20% should go on close adjacencies. What are emerging opportunities that are coming up? And then 10% should go on blue skies thinking, new business models, long-term opportunities. So here we had a risk, which was, should we even be focusing on this idea? The way we addressed that risk is we took a framework and said that this piece of innovation falls within one of these 3 categories. Therefore, it is or it isn't something that we should do. So the fear of risk is a massive challenge. The other big challenge is culture. And this is huge here. The challenge is here, and it's not a problem in the UK. The culture problem is twofold. To use tech and to have access to tech, you need openness and you need a culture of experimentation. And openness is being willing to learn that a 21-year-old mathematics graduate might know how to forecast demand better than you do, and you've been doing this for 20 years. You need to be open to that idea. So openness is a massive challenge here, but experimentation, a culture of experimentation. It shouldn't take 6 months to make a decision about tech. Yeah. If you do that, you're missing out on all of the tech. Tech just moves too fast. If you see something, you think it's the right idea, your first 2 questions should be, how quickly can I test this? How much is it going to cost to test this? Then you run a time-bound experiment. We're going to test this for 4 weeks. You test it, measure it. If it succeeds, fantastic, move on to the next phase. If it doesn't, no problem, throw it away. Then move on to the next project. So those are 2 big challenges, I would say, is the perception of risk and then the culture. And culture is, we need a culture of experimentation and a culture of openness.
Sure. Thanks so much, Anam. I think we think of AI as something, incomprehensible sometimes, but I think you drilled it out in very simple terms and really explained it to our viewers as well of how to think through it. And especially, I think, for our firms who are already maybe leveraging it, maybe it's good reflection to see whether you're doing it the right way, or if you're on the border, but you don't want to take the risk, or you don't have that culture of innovation. I think this is a good eye-opener as well. And I think the idea is really optimization, but do it within something, use the technology in a good way as well. So thank you so much, Anam, for being here on the show, and to our viewers, thank you so much for tuning in for this series and listening to experts like this. Thank you.